You've just been out on a roadshow, obviously issuing new bonds. What's the biggest question the investors have asked you on that roadshow globally?
Look, people want to make sure that whatever plan, there's no fatigue in the economic reform program, that we continue to consolidate further, that we control the level of debt. I mean, no economic reform takes place out of, bothering people. It's something that you need because you don't look at the other part of the story. If you didn't do that, things would have been much worse. But when you do that, there could be a level of pressure. But as you improve and as people find job opportunities, that's what rebalance things.
And in part, I know that you've been in London. I know that you've been around telling the story. You're set to issue $7 billion in the first quarter of next year. Will we see you go to the Asian markets? Will you issue in other currencies apart from dollar and from euro?
We didn't thought of, we didn't have much thought of that right now, but we'll check it out. We'll see what is the best for us in doing this. Remember when we went to Europe, part of the story that Europe is our biggest trading partner, and definitely we have payment in euro, and also there is a level of our debt is in euro as well. So we're diversifying our basket, and we'll look at other opportunities if there is.
We're Bloomberg. We like a target. What can we expect from bonds from you in 2019? Total issuance.
We're talking 6 to 7. Between dollar and euro, hopefully.
You worried about interest rates rising? The Fed's on the move. Are you worried about that?
It is rising, but so far our performance since January of last year, even with the increase in interest rate in the US, we're still at a good level below the issuance rate from the last year. And if this reflects anything, it reflects the better. I wouldn't say credit rating because this is the credit rating agencies. I mean, the better assessment of the investor on our credit risk, where we wish that we'll see a better look from the rating agencies.
Well, you've had good luck with money coming into the T-bill market, $20 billion and counting.
23 plus.
The plus?
23 plus. 23 plus.
Okay, there's a risk. That money can turn on a dime. That hot money can go. That's your risk, isn't it?
No, because if also history teaches anything, in 2010 we were at $12 billion. $12 billion in 2010 equal to almost $30 billion today, depending on the level of liquidity on the universe. Okay, so we are at a level of T-bills bought by the foreign investor that we think it's manageable, and we never thought from the beginning that we're going to 20 and then 40 and then 60. So we're fine, and we don't see a big risk. And there is this trade-off between the credit risk and the level of carry trade that the investor achieves.
So the carry trade is alive and well. You have no concerns about the carry trade for Egypt.
Look, there's always a concern, but I mean our performance is actually improving, and we've seen a rise in these amounts in the recent weeks and months. And we never expected that this will go, through the roof the way it happened, because we were at almost zero level back in November 2016.